Hey, what's going on to uranium? Have you noticed what's happening to uranium? It's melting up in a positive sense. Price is poking noticeably above the 200-day moving average. And the last time we looked at uranium was actually on the 9th of May. That was exclusive for the members at myfinanceteacher.org, where we were expecting a bit of a bull flag to form. That's exactly what happened mostly through all of May. Followed, as we wrote all the way on the 9th of May, by an eventual poke above the 200-day moving average into the top of the ongoing cycle, which is now 96 days long. Usually though, these cycles last for an average of around 160 days. Sometimes they do stretch insanely long for over 240 days. But the ongoing cycle is already 96 days long. Price has rallied significantly over the last 3 months from around $62 to $76 right now, poking above, as I said, 200-day moving average and significantly above the 50-day moving average. What we have here is nearly 10% above the 50-day moving average. That might actually indicate that uranium is getting a little hot over here. Looking at RSI, it often happens that RSI has a significant rally into the beginning of the cycle, a quick cool down followed by one more poke before a longer cool down into the end of the cycle. That's basically exactly what happened in the previous cycle. A rally into the beginning of the cycle from oversold to overbought levels, followed by a quick decline and a poke up again before a more protracted decline into the end of the cycle. So while we were bullish with the members at myfinanceteacher.org all through the last 2-3 months, I am getting a little bit cautious at the moment. In fact, just yesterday I reduced my uranium positions slightly. All of the details are in the model portfolio for the members at myfinanceteacher.org. So that's the uranium price itself, a significant rally that has been going on for 96 days already. The average cycle duration is only about 160 days. RSI is poking well into overbought area for the second time during the ongoing cycle. All of those can in fact be cautionary signs. Moving on to URA, that's the uranium producers, a similar picture here, a significant rally from just around $20 to nearly $40, just over $39 yesterday. Again, as I mentioned, that's when I was reducing my allocation to uranium slightly. We see a bit of a bearish, possibly a reversal hammer candle over here. And of course, a repeated poke above very wide Bollinger Bands. As I mentioned many times in my previous videos, this is one of the signs that we are looking at. Repeated pokes above wide Bollinger Bands that suggest a little too much heat and a likely turnaround down into a bit of a cool down. Again, looking at the cycle duration, we have 70 days here, with the average duration of these cycles is 160 days again for URA, which of course is as expected, does mirror the uranium price cycles, not exactly, but pretty closely. And RSI, of course, RSI has been into overbought area for quite a while. Again, all of these are cautionary signs. And even if you switch to the weekly chart, each candle here is 1 week, we see that even the weekly RSI is into overbought area at 73.4. So while uranium producers don't have to fall tomorrow, there is some excessive optimism and some caution is actually advised. Zooming out from the weekly chart to the monthly chart, so each candle here is 1 month, we notice that over the last few weeks, URA price has actually come up to the level that used to be relatively significant resistance, just around $39 to $40. Hence, even from a purely technical perspective, it's quite likely that there will be a bit of a cool down from this level, which would align with a bit of a temporary cool down into the declining phase of this ongoing cycle. The cycle low providing a bit of a buying opportunity again, followed by a rally into the new cycle. So in the long term, I am still bullish on uranium, as evidenced by all of those regular uranium reports that I publish for the members at myfinanceteacher.org. But in the short term, medium term, going into the next couple of months, again, as I mentioned, some caution is advised. Next, looking at a few indicators of market sentiment, one of those indicators is the ratio of producers to the uranium price itself, connecting some of these tops over the last few years, going back all the way to 2016-17. We see that there's been a bit of a long-term channel lasting for a decade already. And I've discussed the levels of this ratio of producers to the commodity itself with the members, stating that anywhere around 0.3 or so is a good buying opportunity, with anywhere around 0.7 or so indicating a bit of a danger zone. Again, we're not there yet, but these are longer-term fluctuations rather than half-year cycles. Within the ongoing half-year cycle, I would expect perhaps a bit of a possible cool down within the next couple of months before an eventual push higher within this ratio towards 0.6, 0.7. Wouldn't that be nice? Perhaps into the second half of this year. And another way of looking at this market sentiment is the ratio of, again, these uranium producers to S&P 500. This chart is in front of you. Again, we are into a bit of a danger zone. Yes, a decade ago, we came all the way to 0.08, but all the way since the pandemic lows and even before that, over the last 8 years or so, the level of around 0.06 has already indicated some level of danger, and we are right at that level at the moment, with the ratio of URA to S&P 500 at 0.063. So again, suggesting some sort of a cool down, or at least a sideways consolidation, as it happened over here in late 2023, early 2024. And lastly, on the topic of market sentiment, looking at URA Optics Optimism Index. That's the blue line at the bottom of the chart. You see it's a bit volatile, jumping up and down quite a bit. So for that reason, I do like to add this 10-day moving average of the Optimism Index. That's the solid green line at the bottom of the chart. That's a little difficult to see. But historically, we see that whenever this green solid line does come pretty close to the red dashes, that often indicates the cycle top on uranium producers URA. And over the last month or so, this green solid line has been hugging the red dashes, and the blue optimism index has stayed elevated for quite a while with quite a bit of white space underneath. Again, that's suggesting a bit of lack of support, with price possibly testing that support over the next several weeks. Which is absolutely fine for those who are following us at myfinanceteacher.org. As I mentioned, we've just locked in at least some part of the profits. We'll definitely keep a chance to redeploy with a majority of the capital still working for us, as we've only taken partial profits so far. By the way, look at some of these gaps. They're quite noticeable. And if we switch to the daily chart, there's another gap around the level of 30 on URA. That's again pretty close to the level of the 200 as well as the 50-day moving average. And by the time price does approach that gap, this 200-day moving average and the 50-day moving average are going to converge even closer to this gap. And a lot of convergence of all these support levels to test is probably just going to act as a bit of a magnet for the price going into that cycle low over the next perhaps a couple of months. So that's my view. But of course, nobody does know the future. So share your opinion down in the comments below. I'll be looking forward for your input. Have a terrific Tuesday. Bye-bye.